Thinking about investing in Airbnb but unsure where to start? In this video, we'll cover the key steps to profitable Airbnb investing, how it compares to traditional rentals, and the best way to analyze market opportunities. Let's dive in. Airbnb investing means purchasing properties to rent out short-term. Unlike traditional rentals, it can yield higher returns, but it also requires active management and market research. The key to success lies in selecting the right market, understanding local short-term rental regulations, and optimizing your pricing strategy. With the right approach, Airbnb properties can generate significantly higher revenue than traditional rentals, but they also come with unique challenges like occupancy fluctuations, guest management, and additional operating costs. Successful Airbnb hosts carefully research demand trends, analyze competition, and continuously optimize their listings to maximize profitability. By leveraging data-driven tools like AirDNA, investors can identify top-performing markets, estimate revenue potential, and refine pricing strategies to stay ahead. Think of a conventional rental property like a long-term relationship. Tenant signs a lease, pays rent every month, and you enjoy a steady, predictable income stream. It's like the comfort food of real estate investing, reliable and stable. Now, Airbnb investing, they're more like a whirlwind romance. Fun, exciting, but with a bit more work. With STRs or short-term rentals, you've got to stay on your toes, handling day-to-day tasks like cleaning and guest communication. The upside? Those short-term rentals can bring in some serious cash flow, often with higher profit margins than their long-term counterparts. Ultimately, the biggest difference between Airbnb investing and long-term rental property investing are your profits and risks, upfront costs, and level of involvement. Profits and risks. Airbnb investments generally have higher earning potential but a higher level of risk compared to conventional rental property. The higher earning potential comes from the fact that their average daily rate, or ADR, is typically higher for short-term rentals than it is for long-term rentals. The higher risk comes from fluctuating occupancy rates. Your property might only be booked half the time. To be successful, hosts need to account for these fluctuations when setting prices. Upfront costs. Airbnb properties require a much higher upfront investment than conventional rental properties. Here's why. You'll need to cover all the standard homeowner costs: mortgage, property taxes, HOA fees, as well as additional expenses. Unlike long-term rentals, STR hosts cover utilities, toiletries, and subscription services that tenants would usually pay for. STR insurance is recommended to safeguard against short-term rental-specific risks. Furnishing and decorating the property is essential to attract guests, ideally with professional photography to maximize bookings. Level of involvement. Managing Airbnb properties demands a higher level involvement compared to conventional rentals. You'll be responsible for checking guests in and out, handling communication, and coordinating cleaning and maintenance between stays. Pricing requires constant adjustments based on market demand, seasonality, and competition. Many successful hosts use property management services to reduce the workload, but this comes with additional costs. Here's a real Airbnb success story. Adam's journey. Let's take a look at a real-world example. Adam Brown, an Airbnb investor, used AirDNA to analyze short-term rental markets before purchasing his property. By leveraging AirDNA's data insights, Adam was able to select the right location, optimize his pricing strategy, and increase his revenue by 30% in his first year. His success highlights how data-driven decision-making can help investors maximize their profits while managing the risks of short-term rentals. Investing in Airbnb properties poses several advantages and disadvantages. A pros and cons list can help you determine whether Airbnb investing is a good fit for you and your goals. Here are the pros. Higher revenue, potentially greater profits than traditional rentals, flexibility with blockout dates for personal use, guest payments up front, Airbnb secures payments before check-in, cleaning and damage protection, fees cover expenses, and AirCover provides host protection. Market demand growth, short-term rentals continue to grow in popularity, creating more opportunities for revenue. Diversification. A well-managed Airbnb property can serve as an alternative income stream, reducing reliance on traditional employment. And here are some of the cons. Income uncertainty. Seasonal fluctuations affect earnings. Time intensive. It requires active guest management. Higher expenses. STRs demand ongoing costs like cleaning, maintenance, and utilities. Regulatory risks. Some cities impose restrictions or bans on short-term rentals, which can impact profitability. Guest-related challenges. Managing guest expectations, handling damages, and dealing with difficult customers can add stress. Before diving into Airbnb investing, it's crucial to weigh these factors and develop a strategy that aligns with your financial goals and lifestyle. Now you've weighed the pros and cons and decided Airbnb investing is for you. Congratulations! A lucrative career may lie ahead. Now follow these 5 steps to start investing in Airbnb real estate. First, identify the best places to invest in Airbnbs. Research short-term rental-friendly cities with high tourist or business travel demand. Understand local STR regulations, zoning laws, taxes, and restrictions before buying. Look at key market indicators like occupancy rates, average daily rates, and revenue per available rental. Some high-demand areas have strict STR limits, like Maui, Hawaii, which enforces strict licensing but allows for high profitability due to low supply and high demand. Second is to analyze Airbnb investments and real estate data in each market. Once you've picked a location, it's time to dive deeper into neighborhoods, zip codes, and adjacent markets. Even after choosing a city, you need to evaluate factors like seasonality trends, understand the peak and low season to adjust pricing accordingly, supply and demand. Use AirDNA's tools to assess booking windows, occupancy rates, and revenue projections. And competition. Identify market saturation levels and determine whether you'll stand out in your area. Number 3, compare Airbnb investment opportunities in multiple markets. Comparing markets is key to finding a high revenue investment property. The easiest way? Use AirDNA. You can compare location based on revenue, occupancy, and rate growth. Drill down to top performing submarkets and property types to maximize earnings. Identify demand shifts, historical revenue trends, and projected returns before purchasing a property. Number 4, estimate your Airbnb investment income. Once you've chosen a target market, research available properties using real estate platforms like Zillow. Then use AirDNA's data tools to input property addresses and get rental income projections. Compare your potential revenue to similar listings in the area, factor in seasonal variations, and operating expenses to determine your net income. And number 5, strategically price your Airbnb. Pricing your Airbnb properly is critical to maximizing revenue. Consider these strategies. Dynamic pricing. You can use tools that adjust rates based on real-time demand, seasonality, and competitor pricing. Seasonal adjustments. Charge higher rates during peak travel periods and adjust prices during slower months. Weekend versus weekday rates. Optimize pricing by charging more on high demand days. Length of stay discounts. Offer discounts for extended bookings to improve occupancy and secure longer reservations. Competitive analysis. Monitor competitor rates to price strategically and stay competitive. Investing in Airbnb is about more than just buying a property. It's about using data-driven strategies to ensure long-term success. AirDNA provides the insights and tools needed to navigate the market and maximize profitability. Successful Airbnb investing requires data-driven decisions. AirDNA simplifies market research, pricing optimization, and revenue forecasting all in one place. With AirDNA, you can compare markets, track future demand, and set competitive prices. Whether you're a beginner or a seasoned investor, these tools give you the insights needed to boost your STR profits. Click the link in the description to start using AirDNA and take your Airbnb business to the next level. Airbnb investing can be highly profitable when done right. Use data, stay updated on regulations, and apply smart pricing strategies. If you want to find the best markets, click the link below to explore AirDNA's tools. And if you found this helpful, hit like, subscribe, and turn on notifications for more short-term rental insights. Comment below, where are you thinking of investing?